Let's get on board our next expert for today. Joining me is Sunil Subramaniam, Big Market Voice. Sunil, it has finally happened early, a day early, so to say. Last night, of course, GST reforms being announced, non-expected lines. But what are your thoughts? Because I was reading reports, it says that it would leave, 2 lakh crores in the hands of, or it would lead to household savings of around 2 lakh crore rupees. Do you think everything to will get channelized into consumption, or do you think some of it will also flow through to capital markets?
No, no, I don't think that it's all going to go only to consumption, okay? Because what happens is that it's a benefit that is across. You've seen that a lot of unexpected benefits, like the whole agri segment has got benefited, right? So what I'm saying is that while people will probably use this to boost consumption, savings, taking this into savings, you see, existing what they've already bought, the EMIs are already clicking in, right? So this is not money which is going into their hands. It's only if they buy, they are getting it cheaper. So, right. So to that
Hmm.
extent, yes, you can say that some amount of savings because they were set aside, let's say, 10,000 rupees for a EMI, and now they're paying 9,000. So it's a potential saving. But I think people don't think in those terms. I think what's for me important in this is two, three things. One, you already mentioned, the meeting finished a day earlier. So the consensus of the country, of the opposition and the center government, to come together to this. I think that's the first thing, because once Mr. Modi announced it, right, a lot of this news was in the price. But would the states object? Would there be a huge issue of revenue losses? What would happen? Will there be a dragged on meeting and the states have to fight with them? No. So a very smooth acceptance of this. That's a huge positive. That's number one. Number two is that I think that the Mr. Trump needs to be thanked for this, because I think it's because of the tariffs in a way that the country has come together, right? This is the musibat samne aati hai, to everybody thinks of. That's a very important point, right? The third is that if you look at it, I think finally the government has now used all the astras in its armor, right? It did a tax cut of
Hmm.
1 lakh crore. I say now there's a tax giveaway of 2 lakh crores potentially, right? There's the RBI which has done a rate cut and liquidity infusion, right? And so now it's clearly the ball is in the hands of the private and the public sector companies, right? So now there's no excuse, right? Why I'm saying this is from a capital market perspective, from the stock perspective, I don't want some companies to be thinking near term small and saying, can I use this to boost my margins? The ultimate
Hmm.
price to the consumer. So you got to have that foresight as a company to say, in fact, take a cut on margins, make the whole package more attractive to the consumer, and let the boost
Hmm.
happen. Firms will make up, but I don't want some companies to slip into a short term tendency. Acha, this is where I can protect my margin. There's a 10% cut in GST, मैं 7 pass on करूंगा, 3 I'll keep to myself. I think that's something you got to
Hmm.
protect, make sure that it's passed on. Because second aspect is that if you look at it here, this is actually a multimodal, multi-sectoral boost to the economy, right? Because you've seen agri, you've seen medicines, you've seen insurance premium, you've seen automobiles. So when you have this kind of a thing, I'm hoping that the volumes, right, come in, and the real sector to bet on today will be the capital expansion sector. See, because this is going to finally attack that K-shaped consumption bit. See, the rich things have become
Hmm.
now cost at 40%. So the fact that only the rich products, the higher end products are getting sold, now with the bottom of the pyramid getting a huge amount of giveaway, the mass consumption should pick up. And with that, capacity utilization will cross that magic 80% mark. And I think when that happens, right, the greenfield of the capis from the private sector. Right now it started, but it's more in power and a bit in infra. But you need broader manufacturing companies to be expanding their capacities. That kind of a
Hmm.
multiplier which will come in is phenomenal. So I think that this is the time. Post Mr. Modi's announcement, I think 60-70% of the consumption boost expected came into the price. You saw the rally. FMCG did not pick
Hmm.
up so much from today, that should also pick up. So maybe another 20-30% rally is left in the consumption related spaces, right? Auto, realty, and all that. But the real pick today, if you have a slightly longer term perspective, would be the capital goods sector, because I think this is going to be the thing which kickstarts private capex in the country. And that's the
Hmm.
real takeaway, that I think you should now reconstruct your portfolios around that. In fact, consumption would be more of a safer bet because it's there in the price. So you will get a little bit of gains, but from a real wealth creation perspective, you've got to look forward. That's one. Second is
Hmm.
in the capital market. So yes, capital market stocks and everything will get the benefit of potential coming. But look at it this way: the market rally is still dependent on our dear long lost brothers coming back, the FIIs, the
Hmm.
return of the prodigal son. See, even post the August 15th announcement, right, and the S&P upgrade, and the PMI numbers coming positive, and the monsoon numbers looking good, every positive, the FIIs are still net sellers.
Discounted.
So where is
Hmm.
that tilting point? Is this today?
A Fed
That
rate
tilting.
cut, will that move the needle there? Will that reverse course? A Fed rate cut that's also impending in September itself.
A Fed rate cut will help, but I'll tell you where the issue is. The issue is not that emerging markets have not got money from the FIIs. If you see the rally in the Chinese market, the South Korean market, emerging markets have actually outperformed all other markets, but India has
Yeah.
underperformed the emerging market. So it's
Hmm.
not that there's money lacking for emerging market money, it's that India has been viewed as expensive. India has been viewed as this growth has already been discounted. India has been viewed of there's still a tariff threat. The fact that India has taken a tough political stance against a tariff means that that 50% isn't going away. So those things are there. Now, because of the Fed rate cut, the emerging market pool will go up a little more. Yes, India will get a trickle of that. We in the passive funds, we
Hmm.
are what 15.9% of the MSCI emerging market index. So to the extent that emerging market passive flow increases, we'll get 16.9 rupees out of every 100 rupees that goes there, technically. But that will be a little bit of boost. But what we need is a sentiment shift in FIIs. See, there is going to be a
Hmm.
sentiment consumers, hopefully there's going to be a consumer sentiment shift in domestic retail equity investors to the extent that they have been a bit worried, maybe they can come in stronger. Mutual funds, of course, have been continuously buying, so not an issue there. But we need a sentiment shift in the FIIs. Now, that's where we have to
Hmm.
wait. I'm hoping that this, the way the country has responded to the tariff situation and that everything is good, finally tilts that and FII turns become positive. And
Hmm.
also, I think that use of the fiscal plus monetary policy in a very strategic step by step manner, recognizing the problem the country faced ever since the COVID, post COVID, is that we have been in a K
Hmm.
shaped income disparity and a K shaped consumption. By now
Hmm.
putting that, taking that money and putting it in the hands of the middle class and the lower middle class through GS3, through income tax cuts, right? That boost to the bottom of the pyramid consumption is that's absolutely
Hmm.
critical, and I'm glad that they have thought the right way. The second aspect, and though
Hmm.
it's not so much capital market related, is I'll tell you is
Yeah.
the health consciousness that has come through in this. You see,
Hmm.
they have the sugary based drinks more. You see, they have brought down the tax rates on protein based inputs like paneer, right, which is
Hmm.
healthy. So I think that there is also a layer of that balanced approach where they have seen that the health of the country is also important. So I know it's not so much a capital market thing, but overall, I'm trying to still sit in the mind of an FII and look at what's
Hmm.
happening in India. And can I stop my net selling and turn net buyer on the fastest growing country in the world?
That's true. Sunil, of course, you mentioned an array of points. We'll come to it one by one. But, of course, we discussed at length that, money is not flowing in. Although it is flowing into emerging markets, we have underperformed quite a lot, with respect to emerging markets, even US markets for that matter. How is valuation a pain point then? And if at all there's some understanding with the US on the tariff front. I was just reading one of the articles that said that one of the US experts has told Trump to apologize to India and scrap 50% tariff. Of course, I don't know whether that will happen or not, but if there is some kind of a deal by November, as was being pointed out or as was being said by Mr. Piyush Goyal, uh, what kind of a multiplier impact do you see? Because there will be reading economist reports, you can see that there could be some 50, 60 basis point impact as a result of tariffs. But as a result of the GST and demand uptick, etc., I was reading some reports this morning. It said there could be an impact of 70 to 80% on the positive side on GDP. But if the tariff things come together, 8% kind of growth or upwards of 8% growth for India, would that be a very, very credible expectation?
So let me, and you asked the first half of this, you asked me a question. I'll take that and answer the second half, which is that is it
Hmm.
only the valuation that's preventing the FIS from coming in, right? So, and I'll tell you that we need to deconstruct that a bit. So, if you see the news, the contradictory news, right? One is that the US, India exports to US is at 2% of our GDP, right? And at
Hmm.
$47 billion of impact, right? Certain sectors will face the heat, but overall as an economy,
Hmm.
max 50 basis points, maybe one or two bad people have been saying 1% in the GDP, but that's not the thing. What is the thing
Hmm.
which is affecting the FII is not that. It is that the second half which you said, right? What is that? Is that, see, for India to get to that 8% to 10% GDP growth, we need the US as a market. Now, this is not a very
Hmm.
popular thing to say this because sentiment is anti-US in India right now. We are very angry with Mr. Trump for slapping the tariffs, for talking us as a dead economy. There's a lot of anger against. But bear in mind that if given the fact that our per capita income is less than $3,000 and the fact that we are adding 15 crore people to the workforce over the next 2 decades for doing employment to them, for boosting our current fate that we didn't succeed in the past with US exports has protected us from this tariff thing. Okay, so our current is protected. There's only a 50, 60 basis points, and even if you shave off 1%, we're still the fastest growing country in the world. That's not it. An
Hmm.
FII who's coming in, a sovereign wealth fund, a pension fund, is looking at 10, 15 years. And what he had factored in is that this economy is going from 6.5 to 7 to 7.5 to 8 to 10, and which was based on the China Plus strategy implementing itself, that the US shifting its $400 billion trade deficit to China to India and leveling it. And Mr. Modi's first visit to Trump, where they talked about almost no more than doubling the $190 billion trade volume to 500 billion. See, that story has got punctured, right? Because if we are now fighting on the current itself, where is the potential for India to grow to that? Correct. So that's what is
Hmm.
preventing the FIS from really coming in. See, current valuations is a tactical call, right? If it just comes September, right, October, from October onwards, you will get a time correction on the PE. You will get the discounting happening of the next FY 26, 27. So automatically a 10%
Hmm.
correction of the 22 P of the Nifty will take it down to 20, right? Which is, at about our long term average. So it's not that valuation so much, right, as the fact that the growth story of India over the next decade was a large extent dependent on India's replacing a portion of China through the China's plus one,
Hmm.
because of our cost advantage and our labor supply advantage was all factored into the price. And so, when you
Hmm.
now ask me that if there is any good news on the tariff front or a making up with the US front, then FIS, there is no stopping. It will come roaring back into India because these valuations are all a temporary fix. So, for me,
Hmm.
I would see that in a very short time of frame, Sensex could cross a 1 lakh. That's the kind of upside I see. So it is a very big thing, but because it's the back of the mind, everybody is trying to play defense and say, oh, the US tariffs are not affecting our GDP much. That's true. Arre Baba, but what about your growth of GDP to go to the next level? You can't continue at the same six
Hmm.
and a half growth rate and hope to become Viksit Bharat. So you need that 8 to
Yeah.
10%, and that has to come from exports. We can do damage control through exports to other countries, through GST cuts, to rupee depreciation. We can defend the tariff part. But if you want to explode, unleash the animal spirits of the Indian economy, we need the world's largest economy to be a buyer. And so I'm saying that, that's the best thing that could happen is if somewhere Russia-Ukraine war gets to a
Hmm.
closer solution, Mr. Trump then finds there's no need to punish India for Russia,
Hmm.
right? And changes. So that's, like I
Yeah.
said, that's the big, big, positive hiding in, hiding, waiting. The probability of that
Hmm.
happening, your guess is as good as mine. I guess there will be multiple people talking, and Mr. Trump, we all know that there is the taco always there. He chickens out. He changes his mind very often. For all you know, he could change his mind. But like I said, that's just the realm of the unknown, right? We just keep every year hearing. But for FIS to decisively come back to India, that would be a very,
Hmm.
very good step, because that's the only thing that's holding us back
Missing.
from
Yeah.
exploding.
That's true, and I think that's the only good news that's missing now because on the domestic front, we've really seen lots working in our favor. Let's talk about earnings as well for FY26. A double digit is given, and would that be sustainable? And which are the pockets that one should look at? You mentioned capital goods. Any subsets, and if somebody is really looking at rejigging portfolio, which sub pockets will you place more emphasis on right now?
So I would see. So the infra story from the government spending has already been baked into all the typical stuff that goes into a government infra, which is largely
Hmm.
building related. So you have had cement, building materials, steel, and those kind of things done, right? And in the power also, since power capex has been seen, you've seen those turbines and those kind of a thing go. But when you look at the manufacturing capacity expanding, right? Then there's the engineering goods, which is the biggest subset there, right? Which is where you need to go and for setting up a fresh capacity, the machines that need to be bought. So I would say industrial stroke engineering goods, right, would be the bet which would really benefit from these order books. That's one. The second
Hmm.
pocket for me
Hmm.
is that all of this capex to be financed, it's the public sector banks which are going to be there. Because
Hmm.
see, to lend to an L&T and to a Reliance or to somebody else, now everybody is there in the play. But to lend to an MSME which is going to execute that order, right? That is only PSU banks ki bas ki baat hai. Because
Hmm.
they know that segment. They are not so worried about the balance sheet strength and this. There's still a lot of name lending. There's still a lot of track record, cash flow based lending, right? They take those calls. And the spin off is that a lot of this imported cap goods are imported. So there are LCs and guarantees needed. So the public sector banks are the ones which are in the forefront. So to me, if the private sector capex really picks up, it's the public sector banks lending. And that lending is at 12, 13, 14% interest rates. So not only will their
Hmm.
loan book grow, but their net interest margins also will be very, very strong. So I would say that for me, like I said, industrial and engineering and public sector banks are the two ones which are not immediately in the radar, but would definitely come through if finally this whole package of GST plus tax cuts works through in the consumption space. So I think that's the
Hmm.
bet I would like to take a look at, say, where's value, and the value I'm looking at is a price earnings growth multiple. So from that perspective,
Hmm.
you look at it, that's the future growth. So you should buy something before the market becomes fully aware of it. The market right now
Hmm.
is in that consumption hawa. So everybody is out there buying the
Yeah.
consumption. So let them be there. But you have
Ah.
to be slightly off the downtrodden track. You got to go the road less traveled and look into the
Hmm.
future. So to me, those are the two spots which I feel will really benefit
Hmm.
from this whole structure. The other thing is, of course, was that post Mr. Modi's announcement, auto realty consumption was broadly already expected to. The surprise package
Hmm.
today was in terms of the agri space. How much they
Yeah.
have done in the agri space was unexpected. I think that's so. That's a again something which we'll see a good rally in the near term. The second is, of course, is in terms of the healthcare related areas. Not only the
Hmm.
insurance premium part, but medicine costs have come down. So I know, and they are, like I said, I like the fact that this time they have been what do you call, very balanced. And if I, what do I say, put on their thinking hats to for the good of the nation. So because all this, like
Hmm.
say, paneer, protein-based stuff, right? They've taken away the taxes. Sugar-based confectionaries and sugar-based
Yeah.
sodas and drinks, they have hiked it. So there is also that element of using this as an opportunity to channelize people in the right direction, right? So that focus on the health, I liked it very much
Hmm.
as a nation, because America, what is suffering from this obesity crisis and everything because of this
Yeah.
sugar based thing and all of that.
Hmm.
So I think that's been a very nice thing that's been in all, and I see overall the healthcare segment hence benefiting hugely from this kind of a move.
Hmm. Sure. Sunil, one more thing I want you to put into perspective is the thin goods part of it. For now, of course, tobacco and the cigarettes and all will be taxed at 28% plus cess, but then they will move to 40% as well, right? Without cess. So put into perspective what this really means for players like ITC and Godfrey Phillips, etc.
So I would actually be a contra and a buyer here for
Hmm.
the reason that these are price inelastic.
Hmm.
Smoker going to pay another 10-15% more in terms of for his cigarettes. It's not going to make him cut down on cigarettes consumption proportionately.
Hmm.
So there's this income
Hmm.
elasticity here, right? And a smoker, yes, overall, and I don't think that this kind of a tax is going to make a potential smoker not be a smoker, right? So these are all habitual
Hmm.
things. These are all, to be the in things in the with my friends that I need to do this. So I think that these are very resistant to price increases. So to the extent that market takes a negative call on these sectors, I would actually be a buyer because these are ultimately inelastic goods which will do that. And these companies also don't need to then cut their margins to boost that consumption, right? So I think the market will react to this, and I feel that's a buying opportunity because otherwise, it's these are good, solid companies. So I don't think that they have
Hmm.
seen every, historically, every budget used to hit the cigarettes with a additionally excise duty, but still those industries continue growing. So to me, actually,
Yeah.
the sin sector is a contra sector. Also, take in the cars. If you take the higher end cars, also now treated as sin, right? Okay, right. Now
Yeah,
look at it
that's true.
by a perspective, right? Already a huge chunk of it was anyway taxes. Now at the margin that goes up, the guy who's buying a big, BMW EV or a Benz EV and all, he's not really so worried about these kind of a thing. If at
Yeah.
all he takes a loan, it's only for tax purposes, right? So I don't think that even the upper end market, right, where there will be a rush to buy things before September 22nd, obviously, right? Because after
Hmm.
22nd, the cars become expensive. So naturally, all the stocks they have of the bigger cars will get sold out in the next 2 weeks flat attack. So that will be a temporary boost in their sales. But
Yeah.
overall, see that somebody is going to buy a BMW SUV and says, "Oh, now it's cheaper to buy a Tata Tiago. I will go." No way.
Hmm.
See, these are lifestyle
No, no, of
purchases.
course not.
They are also income
Hmm.
inelastic. So I think that
Hmm.
actually the same goods is a good contra bet today to the extent that the market takes a negative view because I don't think that ultimately they are going to see any drop in demand because a tax thoda
Hmm.
10% बढ़ गया. No, I don't see
Hmm.
that.
Okay, sin goods, good contra bets. I like that view, Sunil. But I've got so many questions. I don't know how to pose them to you in such short time. But what about consumer finance? Bajaj Finance and the likes of Kiam Finance. Auto loan segment was under stress for some of these auto-focused NBFCs, right? What happens to them now? Some of them are, of course, very upbeat in today's session. Within the pack, who stands to benefit the most?
No, I would say definitely to me the larger players there because what you need here is a quick turnaround. And you see, this has to be a combined package of the manufacturer plus the lender at the dealing counter, right? At your Vijay sales, at your this, right? So I think these guys will be very fast at offering this. And I think that at the cost of net interest margins, they will bet on volumes. So what you then need to look at is that their NIMs may go down and part of the market's reaction to that may be because of that, but doesn't matter. It's a volume growth play, right? The entire country, whether it's the FMCG or it's the lenders, everybody has to look at it saying, this is my chance to build volumes. I will take a cut on my margins, but build volumes. So I am very positive that it's the NBFCs in the lending space who will be first of the tracks. They will be there at the counter. When you go to buy a refrigerator, they'll be there offering you those 0% EMI deals and converting. And the whole nation, I think, will gear towards making this a huge Navratri, Diwali, Christmas, kind of a sales blowout. So I would say all the players who are there will benefit. It's not another challenge. So to that extent, obviously a gold financing company doesn't have anything extra right now. So within the NBFC pack, right? You see, it's the retail consumer lenders who are lending against durables, the auto lenders who are lending against that. It's those. And the point is that, see, people always use this to stretch. So if the EMI can come down, they'll make that next higher car, but within, of course, the 1500cc or what is defined as a small car, right? So I think that that's actually a very good play, according to me, is the NBFC play today.
Hmm. All right, that's the view then. But with that, Sunil, would like to thank you for agreeing to join on a short notice and putting things into perspective for us. I have a lot of questions for you, but I'll save that for another day. Otherwise, we will not have much to talk about next time. But thanks a lot for sharing your perspective. Always, pleasure chatting with you. And you put things so simply. It's very easy to really understand the complex issues. Thanks to you.
Thank you. Thanks.